Today, we will talk about how to pay your mortgage faster. Let's have a look at the details. Prepaying your mortgage can shorten the life of the loan and save you a large amount of money in interest. There are two ways to do this. You could contribute extra money every month or year, or you might be able to take advantage of falling interest rates by refinancing the loan. Whichever method you choose, the important thing is to make consistent payments. This article will show you how to save money by shortening your mortgage. The first step is making extra payments. Ask if you can make extra payments. The key to paying off a mortgage early is to make extra payments against the principal balance. The lower your principal, the less interest you'll have to pay. Accordingly, check with your lender to see if they will accept extra payments. Write "apply excess to principal" on the memo line of your check. Always include this phrase on extra payments to ensure that the money goes to paying off the principal of the mortgage and not the interest. Pay your mortgage every 2 weeks. In effect, you can make an extra month's payment each year simply by paying half of your scheduled monthly mortgage payment every 2 weeks, rather than 12 times a year. Make an extra contribution once a year. You might not make enough money to pay extra every month. However, if you come into a lump sum of money during the year, you should consider directing it toward your mortgage payments in a lump sum. Round up your payments. Choose an amount you can afford and budget for that amount. It may surprise you to learn how a small increase in monthly payments can have a large effect over time in whittling away at your mortgage. Start early. The sooner these efforts begin, the more money you will save in the long run. The second step is refinancing your mortgage. Refinance when a lower interest rate becomes available. With a mortgage refinance, you get a loan that pays off your current mortgage. A lower interest rate means your monthly payments will be smaller. Refinance into a shorter term. You'll pay off your mortgage faster if you refinance a 30-year mortgage with something shorter such as a 15 or 20-year mortgage. Gather required documents. You'll need to show the lender your financial information, so collect this ahead of time. Don't borrow too much. Lenders may pressure you to make more money than you need. Review the terms of the loan. Make sure there aren't hidden fees that will increase the cost of the refinance. Apply to the principal the money you save by refinancing. A refinance will benefit you the most if you use the money saved to pay down the principal. Remove your private mortgage insurance, PMI. You are buying this insurance if your mortgage is conventional and you borrowed more than 80% of the home's value. PMI costs between 0.05% and 1% of the loan amount, a meaningful sum. Cancel this insurance as soon as possible, it benefits only the lender, and redirect the amount of the PMI premiums toward your principal. Thanks for watching this video. Please don't forget to like and subscribe to our channel if you like our videos.